Germany's SAP has hiked its full-year revenue targets thanks to strong software sales and the acquisition of cloud computing company Ariba. SAP's co-CEO Bill McDermott joins us now live from Waldorf. Mr. McDermott, thanks very much for joining us once again on Reuters Television. Now, you've hiked your 2012 software revenue outlook. Is this a bit ambitious given the very difficult current economic climate?
We have a very strong business right now. If you look at our core business of applications and analytics, it's growing in double digits. And if you look at our new innovation categories, whether it's the cloud, mobile, or HANA, which is our in-memory computing database to make every company real time, these are growing in triple digits. So the reason I felt we were in a good position to offer guidance at the upper end is we're growing in multiple industries and multiple marketplaces around the world, and the pipelines are strong. So we're feeling very, very good about our business.
Given that very ambitious outlook following the acquisition of Ariba, are you looking for more M&A? Is it little bolt-ons, or are you looking at anything significant?
Well, we always do M&A when it moves our company forward into new categories. We did this with mobile. And obviously, we did this with the cloud in the case of SuccessFactors and Ariba because we felt we really did not have enough cloud DNA in the company. Now we feel like we have what we need to grow our company organically. The revenue that you're looking at today is 98% organic. So we're in a good position. We don't need to do big M&A to achieve our goals.
But how big a focus are you placing on the cloud at the moment? How much is that right sort of dead center for you?
Well, we said that we would be a €2 billion cloud business by 2015. If you look at the billings in our cloud business this quarter, it's growing at 116% on a year-over-year basis. And we already have more users in the cloud than any other company in the world. And we're number 2 in the cloud as measured by revenue. So our ambition in the cloud is robust. But we also believe that our customers deserve choice. So whether they want to run their business on-premise, in the cloud, or on their device, we'll orchestrate for them among these environments at the process and the data level so they can be best run businesses, their employees can be productive, and their customers can be happy.
You are sounding incredibly bullish, but how concerned are you about what's happening in Southern Europe at the moment? I mean, how much of an effect is it having on your business?
Well, I've been all over Southern Europe. In fact, I was in Milan yesterday meeting with CEOs of banks and fashion companies. And these folks are talking about how they are going to become either more efficient or more compliant, or certainly how they're going to capture this consumer revolution that's going on in the world, because their consumers can buy goods and services from any geography or any vendor in the world because they're so empowered on the mobile device. So the conversations we're having is not about gloom and doom. It's about how can they invest in this downturn so they come out stronger on the other side.
But are they actually investing? I mean, that's the point. Certainly from the company point of view, are they investing in your new products? Can they afford to?
Absolutely. They can't afford not to. What they're doing is they're laying off of commodity IT investments like hardware and devices that don't matter. And they're investing in software because it's the innovation layer that enables them to get a different business outcome. If there's no business case and there's no outcome, there's no deal.
Okay. Are you stealing market share from Oracle? We've been hearing a lot about this recently.
Yeah, we are. We're taking market share from a lot of folks, but certainly they'd make the top of the list.
And how much are you actually stealing and where?
I like to think we're earning it versus stealing it, but in any geography you look at right now, our database business powered by SAP HANA is growing at 6 to 7 times faster than Oracle all over the world. And if you look at markets like Europe, for example, we're easily 4 times the size of them and picking up points of market share as we go. So it is really consistent with our strategy to be the leading business software company and to out-innovate anybody in the marketplace, and our customers are responding in kind.
Final question, and briefly, if we may. You talked about HANA a couple of times. This is your joint venture with Cisco and EMC. Are you making money out of it yet?
Oh, absolutely. HANA, first of all, is a high-performance application network appliance. Think of it as the fastest database in the world. And because we're open to the ecosystem, companies like EMC or Cisco or IBM or Fujitsu and many others are standardizing their hardware and services offerings around HANA because it is the new standard for real-time enterprises. So it's growing very quickly. We targeted 320 million euros for that business this year, and it will do at least that. It is a runaway triple-digit growth machine.
Okay, we'll leave it there. My thanks to SAP's Bill McDermott. Thank you very much for that. I'm Nigel Stevenson. This is Reuters.